Let's take another question, Narendra. Ravi has written in now. He wants to know if he should continue investing in the IDFC Premier Equity Plan A. He says because other plans like Mirae Blue Chip and Franklin smaller companies are doing so much better. Now, obviously, at this point, a fund like smaller companies is going to do better because we've seen mid-caps rally so much. But IDFC Premier Equity is not a bad plan. I wonder why he's so keen on giving up on it.
No, that's a problem. You know, most investors look at recent performance and they get carried by or tempted to invest in those. IDFC Premier Equity is not a small or a mid-cap fund by design. It is a tactical fund. It tries to capitalize on a specific theme at a given time, and that can change. So far, it has been, it has emphasized small and mid-cap stocks in its portfolio, and has done exceedingly well in a very difficult market. And it has been able to, do much better than most other funds in a struggling market. And now it's about to change track. It is beginning to change its track with the changing economic environment or the political climate, the way it has impacted our markets. So maybe add some more, but IDFC Premier Equity remains an impressive fund and a good fund to continue your investments.
Well, let's assume, Narendra, like most of the other investors who write into us, that he's a long-term investor and this money is going to stay invested for at least 5 or 6 years. In the very minimum, he has IDFC Premier Equity Plan A. You said Franklin smaller companies might be a good complement to that. Is there any other fund you'd like to recommend to him?
Smaller company fund is the most impressive smaller company fund available. And it has done exceedingly well, and it never compromises on the quality. So that is something which is paramount in a small company, a fund which is focused on smaller companies. So from that standpoint, it remains a great choice. But I would still urge an investor like him that don't get carried by short-term numbers. Try and invest in a fund which can invest across the market. And if at all you are, you find it very interesting and you think that, you can withstand the ups and downs of this, then maybe it can be, 10, 15, 20% of your total equity investment, but it should not be an equal allocation.